everyone, and welcome to our Make It Simple series. So as you're aware, typically based on questions that we get from plan members, we create our short videos series to help you understand the topics further. So a hot topic that we get questions about a lot is about exchange traded funds versus mutual funds. So today we will be going over this and helping you get a better understanding of the differences. All right, so Rahim, hopefully you can start this off and give us a definition of the differences between the two on a high-level perspective.
Yeah, perfect. Happy to do that, Anusa. And just a little small caveat that whatever we talk about today is meant to be in the Canadian context as well as in a registered plans context. So there are other avenues like in a non-registered plan or for people that live in other parts of the world where some of these rules or definitions or tax advantages may be different, but today we're going to be talking about it from a Canadian perspective. So I just wanted to make sure that whoever's listening to this is aware of it. So ETFs, as you said, or exchange traded funds, they're not very different from your traditional mutual fund. So you have a exchange traded funds that holds investment options, whether it be individual stocks or individual bonds. The only difference with these is, it's pooled together and it's traded on an exchange, for example, whereas mutual funds are investment pools, similar, where you have a myriad of stocks and bonds under one pool, and are traded directly through a mutual fund company. So one exchange traded fund traded on an exchange, an example would be the Toronto Stock Exchange or the New York Stock Exchange, whereas a mutual fund is traded directly through a mutual fund company, for example, directly through Invesco Trimark or Fidelity or a company like that, rather than an exchange.
Great. Now, can you help us understand the differences between costs?
Yes. So costs, generally speaking, ETFs have the reputation of having lower costs, and it's a lot of it is structure related, internal administration expenses related. They both have costs. Traditionally, though, ETFs generally tend to have a slightly lower cost than mutual funds. Again, it all depends on whether you're comparing an index mutual fund to a index or passive ETF or an active equivalent. But however, on the whole, ETFs generally do tend to have a lower expense ratio, as we would call it, in the business.
Okay, great. So how flexible are ETFs versus mutual funds in terms of trading as well as transparent?
So the trading part first. So one of the things that, ETFs have going for them is that they're traded intraday, just like a stock. So because they're on an exchange platform, there's lots of trading flexibility. So if you and I had an ETF in a self-managed account, we could go right now, as long as it's between 9:30 and 4 p.m., we can sell or buy immediately. Whereas a mutual fund, it's traded once a day at the close of business. So mutual fund companies have something called the net asset value. So that is the price of that mutual fund, and that price is determined after their market closes at the end of each day. So if you wanted to sell your mutual fund at 2:30 p.m., you would not be able to sell it immediately. So let's say the markets really fell off a cliff at 2:30 to 4 and you wanted to get out, you wouldn't be able to do that. You would get the price at the end of the day on the close. The prices are usually available 6, 7 p.m. and that would be the price your transaction would receive. Whereas in an ETF, you can get in and out directly. The other question around transparency, I would give this an edge to ETFs as well. So with an ETF, you'll notice that if you go to their fund fact sheet or online, you will be able to see all of the holdings within their portfolio. So if the ETF has 50 holdings, you would be able to see all of them based on whatever the reporting period is, month close or however the company reports. Whereas in a mutual fund, if you go to a fund fact sheet electronically, or however you access that information, most of the time, mutual funds will only show the top 10 holdings. And if a mutual fund, let's say, has 55 holdings and you only see the top 10, and the top 10 maybe only make up 25% of the portfolio, you have no visibility over the other remaining 75% of the portfolio. So that's where I would say ETFs kind of have the nod because of that added flexibility that they provide versus a mutual fund.
Okay. So next, diversification is always a key word when it comes to investing. So do you mind explaining how diversification plays amongst ETFs as well as mutual funds and their investment strategies?
Yeah, that's a good question. I would say, in the industry there is a myth that says mutual funds, and even when you and I we look at different articles, it tells us that mutual funds are more diversified than ETFs, and I don't think that's necessarily true. It depends on what type of mutual fund or ETF you're buying. And they will be diversified in a way where the actual ETF or mutual fund will have the holdings within that. There could be diversification in there, or adding that certain ETF as an overall diversifier for your whole portfolio. So there's, depending on what your definition is of diversification, both ETFs and mutual funds can be diversified equally.
Great. So lastly, given that most of our listeners are members of a group retirement program, do you mind explaining the criterias or how ETFs as well as mutual funds play a role in their program?
Good question. So right now, unfortunately, most of the group retirement carriers that most plan sponsors and most plan members would be used to, especially on the life co side, for example, Sun Life or Manulife or Canada Life, Desjardins Industrial Alliance, within that group retirement setting as of today. So we are in April 2024. ETFs are not an option, right? These back-end systems can only manage mutual funds where you get a net asset value at the end of the day. They don't have the flexibility to have ETFs as a direct option for plan members to buy and sell. And that may be system related, or in the group retirement space, there's a very long-term nature to it. So it could be that, we don't want people going in and buying and selling ETFs throughout the day. So right now, mutual fund type options, or in our world, calling them segregated pooled options or pooled funds, that is the only available option. However, we are noticing that fund managers behind the scenes for strategies like asset allocation funds or target date funds are incorporating ETFs behind the scenes. So not necessarily what a member would be able to buy on the platform, but they are being more utilized in the background to lower the overall portfolio fees. So to answer your questions, right now, people that are listening to this particular video, you only have access to pooled funds or segregated pool funds or mutual fund type structures. ETFs are not available. And hopefully by being a plan member in a group setting, you already have lower investment management fees on these pooled funds because you have scale with other members of your organization. So you will have a similar type deal with an ETF, which is known to be low cost. You should hopefully have that within pooled fund. And again, the carriers that are our partners, they have a wide variety of funds available. So you'd have different managers, lots of diversifications. So the only thing you're really not getting today in an ETF setting is the ability to be able to trade throughout the day, is the one really key piece that you're missing, along with that visibility in terms of knowing all the stocks or the bonds within your portfolio. Everything else, plan members should be able to achieve everything through a pooled fund structure or a mutual fund structure.
Well, thank you, Rahim, and providing your insights and the differences between ETFs and mutual funds. For our listeners, if you have any sort of questions, feel free to reach out to our team at Penmore Benefits by calling our toll-free number, extension 236, or shooting us an email at retirement@penmorebenefits.com, and we'll get back to you within the next business day. Thank you all for listening, and stay tuned until next time for our Make It Simple series.